Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're joined with Robert Norton of Rio Blanco Energy Partners. It's going to be a pleasure to have him on. We're going to talk NGLs and midstream and some other exciting stuff, maybe get into some of the favorite topic du jour of green energy. So Robert, please introduce yourself. What is Rio Blanco? Tell us a little bit more about what you guys are doing.
Robert Norton here, working midstream oil and gas. We got a company that we've just kind of stood up called Rio Blanco Energy Partners. We're focused on acquiring, existing infrastructure, pursuing growth through operational improvements, system integration, optimization, and downstream integration. So I know that that's kind of a mouthful, but really what we're trying to do is go out there and take underutilized assets, figure out how to improve them by getting more volume coming through them. And easiest, probably lowest hanging fruit there is to help get them to better markets, or to take advantage of the volumes that they've got coming through there. So really focused on natural gas liquids. We're going to get into that a lot today, and helping the producers on the system get the best possible netbacks for their product.
Right. So just to kind of kick off, what kind of projects are you working on now or looking at now that we can talk about as like an example of something that you guys are looking to do?
Yeah, so we've looked at a handful of different projects. We looked at a condensate system that was up in the Marcellus Utica area. Condensate system was really just moving some condensate barrels down to a barge, and they were blending them with NGLs. There was an opportunity there there was a rail facility that could serve the East Coast refining markets. There was a barge facility on the southern end of it that was going to serve some of the Ohio River refining. But they weren't too far away from a crude pipeline. Our plan was to come in and basically bring crude onto the system where you could get those crude barrels over to the rail facility and then over to the East Coast refineries. We are going to try and send some condensate from the system up towards this crude pipeline, get it up to Southern Lights, and send it up to Edmonton for blending. We looked at a couple of different options for what to do with those NGLs, and we really just felt like the system was being mismanaged and underutilized, and weren't able to get to a deal with the producer, or excuse me, the owner of the system. We'll be able to talk about this some as the podcast goes on. But when we first stood up our idea for the business, we really thought we were going to be an acquisition first company. Right. That strategy is possibly started to shift a little bit. We've really seen since kind of the November timeframe, basically since the vaccine news. You look at with E&Ps, you look at with MLPs. Really any publicly traded oil and gas company, since the vaccines come out, there's been, definitely an increase in share price across most of the business. And what's wound up happening is the cash flow on the public markets is being valued at a higher multiple than the net asset value is on any of these particular assets. So if you want to go buy something from a public right now, it's extremely difficult because, the contracts on the system are really going to only support, typically, 4 to 5 times EBITDA multiple contracts and volume. The volumetrics declines behind the system aren't going to allow you to pay up. And, if you look at these, I've got some just kind of quick hits here for you. But, right now the average C Corp's trading at 10.7 times EBITDA. The average G&P is trading at 6.8 times, and then your logistics companies are trading between 7.5 and 8.5 times. So depending on who you're looking at buying an asset from, your low end is almost 7 and your high end is almost 11. And you look at these systems and the volumes aren't growing. You're not able to get minimum volume commitments. You're not able to get drilling commitments. You're not able to basically sign up take or pays on a lot of this. So, when you're looking at being an acquirer, you're saying, hey, we'll pay you 4 to 6 times. And they say, wait, we can't go and replace this cash flow for anything less than what we're trading at. So even if you get creative with earnouts, it's just really hard to bridge that gap. So, we've kind of shifted a little bit in our strategy. We're really trying to find someone right now who's looking at, developing out a new position, and maybe has some undedicated volumes that would allow us to come in and get some pipe in the ground and then go and buying some corresponding assets around it and then really try and grow that way. we still feel like there's absolutely no need right now to go build any additional processing, any additional storage. That's out there. It's just about how do you tie in the existing infrastructure to where future growth might be, and really capitalize in that regard.
So when you're looking at some of, just because there's a lot of pipe in the ground in some different locations, and with the difficulty, and we'll get into the Biden administration and what is that going to mean for pipelines in general. But what states are you looking at that might need some capacity on the greenfield side, or has some maybe some infrastructure already in the ground that you can either expand or maybe do a bit more with, that has a lot of opportunity in the near term?
Yeah. So, when we first started out, we weren't quite sure who the administration was going to be. Now that it's Biden, that's really kind of put a dent in some of the basins that we were looking at. We had looked at some stuff up in Wyoming. We had looked at some Uinta type assets because there's a lot of existing infrastructure that needs to be optimized up there. We've kind of shifted our focus a little bit more to Bakken. And then we're also looking, of course, at Texas. There's a lot more competition in Texas, especially in that Haynesville-Bossier area. Again, we're going to be more focused on NGLs, gas liquids, than we are on dry gas systems. But feel like there's a real opportunity in the Bakken. There's that crude is got demand all over the place. Now we've obviously we've got some question marks with Dapple, but do feel like outside the inventory question, the rock is good, the resource is good. There is still undeveloped acreage up there. We really just kind of like some of the unique opportunities there. And if Dapple is shut down, then we're actively looking at ways that we could potentially capitalize on that, from either setting up more infrastructure to service rail, or get the product to pipe that is able to flow out of the basin.
Right. Now, when we talk about, just for those that may not know, when we talk about natural gas liquids, we're typically talking about the heavier side. So ethane, propane, butane, some of those isos can be mixed in there. And then you start getting heavier into that condensate side, which is naphtha, light naphtha, heavy naphtha, gas oil, natural gasoline. So there's a whole slew of things that can come out of the ground that has to move and has a different BTU value, or that heat value. And the heat value is important when you're thinking about, where things are going and what the markets are. So when you're talking about some of the NGL capacity coming out of the Bakken in general, the Three Forks, where do you see kind of that oil growth, or is there enough oil growth that's going to continue, and that then there just needs to be more NGL takeaway? What does that look like on a growth project, on a growth projection, especially if Dapple does face some issues going forward?
Yeah, I think the biggest issue in the Bakken right now is on that gas piece. Right now there's still a lot of flaring. You can basically still see that. You can see the Bakken from space at nighttime.
Right.
And so, trying to get all of that gas onto pipe is proving to be a logistical challenge. Right now, your big residue gas takeaway through the Bakken is the Northern Border Pipeline, and the Northern Border Pipeline extends all the way up from Canada, Alberta, comes down into Chicago, serving the Chicago markets, and making power out of that residue gas. And kind of what's happened over the last 5 or 6 years is you had the volumes coming from Alberta have started to drop, and they've been replaced with North Dakota associated gas. The North Dakota associated gas on a BTU level is a lot higher than the Alberta gas is, which is causing some problems downstream. So the BTUs have increased at the downstream markets in Chicago, and it's starting to heat up the gas turbines too much, and they're having issues with their blades, and they're having issues with the efficiency of their gas plants, and so they're looking at right now converting the BTU specs down to 1,100 BTUs on this residue gas pipeline. And so that creates a myriad of problems. When you look at the Bakken, there's tons of gas plants that have been up there. They were built out. A lot of them were producer owned as the Bakken was growing. They built mechanical refrigeration unit gas processing facilities. And, just to kind of dumb it down a little bit, the mechanical refrigeration are going to pull out less natural gas liquids than a what we'd call a cryogenic gas processing plant would. The cryo is going to get it colder. You're going to get more NGLs drop out. You're going to be able to do more dynamic things with them. And so when you have a bunch of MRUs, then you get those that ethane stays in the gas stream instead of dropping out as a liquid. And the ethane is going to be burning the hottest. And so we've started to kind of see there's some interesting projects that are coming out of it. There's the first or second, I think it might be the second in the United States, purely ethane power generation plant is being installed right now. So they're going to actually make electricity on this ethane. You've got people that are doing some neat things up there with Bitcoin mining. So you could potentially power your gen sets with ethane. Or if you've got a fractionator, then you're able to pull off the ethane and send it back down hole for EOR. Now, you're not able to capitalize on that ethane value, but again, it's allowing that gas to be able to flow onto the pipe. Should the BTU spec change happen.
Yeah, and just to clarify for those that may not be that may be new to the pipeline industry, when you're looking at BTU value, just think of it like when you're turning on your stove. If the BTU value is too high for what the stove is rated for, well, the stove blows up. So it's very, very simple where you have to take some of that heat out of the system. And it gets very interesting when you start talking about LNG and the different countries and their different structures, where like Japan, for an example, has to spike the natural gas coming in with either propane or ethane because they actually operate at a much higher BTU value than where the U.S., just to give an example, usually exports LNG at 1040. They're normally running anywhere between 1250 to 1300. So you have to enrich that natural gas before it can go into the pipeline. And then you have the opposite problem where pipes will run too hot and you have to start pulling that BTU out. And when you look at the midstream component in the Marcellus Utica, there was that big build out from the refrigeration into the cryo to really kind of recover a lot of this ethane propane more efficiently. And then we obviously had the growth of ethane crackers in the Gulf of Mexico that needed that feedstock. So when you're looking at some of this opportunity, not only into some of the capacity in Chicago, some of the new power gen, what are you thinking about in terms of other end markets? Because we know Conway is a bit trapped. There's not as much capacity. Where Mont Belvieu, you're right near the coast. You can get into the market. We know the LPG, which is just liquefied petroleum gas, which is mostly propane and butane, continue to be healthy. There's a lot of growth in Asia. So when you're thinking about the different components, is there an opportunity to go from that far north into the Gulf of Mexico, or is it more going to be regional capacity and growth that you're seeing and some opportunity within that?
Yeah, I think when you think about Bakken, it's probably going to be a little bit more regional. I think that there's going to be some issues in the Edmonton market on the diluent blending side from the oil sands. So just the fundamentals behind how those projects work, they're definitely longer term. So if you're doing the oil sands actual mining, those are 30 plus year life projects in situ, multiple years. So you're not really going to see as much of a swing in volumes lowering as commodity prices have come down. And so, there's like a steady growth that's projected up there for the for that market. And so you could potentially send butane up there. You could send condensate up there on the heavier sides in order to meet the demands of those blending projects. Because, as we've kind of seen with this more, it's just a challenged commodity price environment. The rig counts have dropped, and the associated gas coming out of all these different basins has dropped. And historically, where Canada has been able to take that associated gas and that condensate for their blending, we kind of feel like there's an opportunity for them to need to import some of those volumes. So whether that's from your Marcellus Utica, being able to get them up to Southern Lights or Cochin flowing north, or out of the Bakken back up there, there's definitely a possibility there. We feel like there is going to be a demand for the propanes and the butanes at some of the more regional refineries as refineries are shut down because of the Biden administration. You've kind of seen some of the things that those refineries in Cheyenne, Wyoming are have been shut down. And so as that happens, where do you find the home for the other feedstocks for blending, and how do you get those to market? So, that's something that we've been thinking about and trying to anticipate, and just trying to understand if there's a local market that allows you to, build a depropanizer to serve, that particular basin. Those are the things that we're trying to understand and trying to work through as we evaluate all these different projects.
Now, is there available cross-border passage in terms of right-of-ways or pipe that is underutilized that you can get it into the oil sands?
It just kind of, right now it's a little bit tricky. I think you have to get it to a market further over to the east to get it back to the north. So you are still sending it to that Chicago area before it can go back up. There's a couple of companies up there. That have some cross-border opportunities. There's a company, an infrastructure company in Canada called Steel Reef. Steel Reef's got a bunch of Saskatchewan projects, and they've also got a project in the Bakken, and they've got a cross-border pipeline, but it's serving that local Saskatchewan market that's kind of stranded more than getting it all the way to Alberta. But yeah, as far as getting things up for blending, it would not be able to take a very direct route from the western North Dakota, eastern Montana up there.
Got it. So when you think about, just for those that aren't familiar with oil sands, think of API as the viscosity of oil, and when you're talking about oil sands, you're talking about essentially molasses. So you have to use some diluent to dilute it down to make it a bit, move it easier throughout the system, and that's what is a big component. And there is a lot of growth that's coming, and it was always going to come with or without Keystone. Now, we've been saying from the very beginning that it would take 2 Trump terms to get Keystone approved, because it was already stuck in not just on a federal level, but also a state level in terms of getting that right away. So it hadn't even been heard in some of these in some of the state courthouses. So it was going to take time, and now that is officially dead. Now it's time to kind of move on. And when we shift over, and you talked about Chicago, and there's been talk about Line 5, what's going to happen in terms of coming from Canada down into Chicago and that region. Is this something that would be able to replace Line 5? Would you be using it, or how does that dynamic work? Or would it be a benefit if that goes away, because now you're going to have a captive audience that's going to require that backfill?
Yeah, I think that's a really good question. I don't think we've played it out that many steps into the future. I don't think that you'd probably be able to reuse Line 5 for that. I don't know that, given the volumes that pipeline can move, might be tough to replace it just with condensate or NGLs. But it's definitely going to have more crude stranded in Alberta that needs a home and needs out, and that would probably necessitate additional diluents for the blending. I think when we think about what the impact of Keystone is, it just, you're looking at now some potential for multiple more unit trains a day coming out of there to get the product down to the Gulf Coast, or get the product to the west coast of Canada, or even over to the East Coast refining. So,
got it. Now, when you think about Dapple and just using some narrative of, let's assume it gets shut down. So Dapple gets shut down. What happens next?
Yeah, this is a tough one. Dapple's probably pulling, I think, around 40% of the barrels in the basin are flowing on Dapple through pipe, and the big shippers on Dapple are Continental. It's Hess, it's Marathon. It's obviously serving a lot of other smaller producers, but those are kind of your big 3 shippers that are definitely going to be the most exposed. If Dapple goes down, you've still got some options. True Companies runs a pipeline, the Bridger/Butte pipeline, which goes and takes your barrels down into Guernsey. Now, from Guernsey, there's about 4 or 5 million barrels of storage there. But from Guernsey, then you can get to Patoka, Illinois, so more, refining over there. You can get to Salt Lake City refineries, and then you can also, you can get on Tallgrass. You can get down to Cushing, but I think that you're going to wind up seeing the Guernsey market being flooded. So that is going to kick several 100,000 barrels a day onto rail, and when that happens, you're going to see basin diffs grow even wider. And so, if you looked at the basin diffs before the question mark came up with Dapple, they were around $3.80 of a discount when you were looking at the Bakken. That moved closer to $5.50 after the question mark was there. And, I think that if everything moves to rail, then you need to add $3 or $4 more a barrel. That's going to have to increase because of the basin differentials in order for these projects to keep the same economics. Right. As far as a capacity issue, you kind of look around. There's a Delta refinery in Philadelphia that's making jet fuel. They are taking 1 unit train a day. If volumes, or not volumes, but if demand comes back for jet fuel, they have the ability to bring on more trains. There's going to be other refineries on the East Coast. You got PBF, you've got a handful of others throughout that Illinois area that can ramp up production, but otherwise all this stuff's going down to the Gulf Coast, and all of these refineries that they like Bakken crude. It's about 43 API on average, and these refineries can handle it. There's not a lot of sulfur. There's not a lot of additional equipment that you need to take. It's just going to be interesting because it's definitely going to create a few winners, and it's definitely going to create quite a few losers as well. And as the Biden administration continues to shut down refineries, it's going to be. I'm interested to see where the demand is for this Bakken crude if some of these regional refineries go away. The refining market's already extremely strained on margin. So
yeah, that's something that we've been covering at nauseum when it comes to what's happening on the refining side. So I just pulled up Bakken Guernsey right now at the spot level, and I see that the diffs are at $1.15. So Bakken Guernsey is trading at 54.86 versus WTI, which has rallied a bit, obviously. So now we're $1.15. That it's tightened a bit just because of some activity, and you have more Canadian crude starting to come down. Now, when we're looking at this, is it $4 or $5 from that $1.15, or do you think it widens out and then widens out again? So all of a sudden you're looking at something closer to $8 to $9 just because you're going to get that just, let's just say, competition to get on a pipe and get out of there.
Yeah, I think that's a much more realistic number, and I'm sorry I wasn't a little bit more clear.
Oh no, that's fine. I just wanted to see where it was because when we've seen this go out as wide as $13, $14 back in the heyday of growth. So it's not crazy to see it happen again. Especially when you talk to or look at Hess, and they've talked about increasing some of their activity in the Bakken specifically, just given some of the pricing that we've seen in general. So it's just going to be interesting to see how that shakes out. And as you talked about, we've done multiple shows on crude quality and why crude quality is so important. And the Bakken really answers a lot of those questions, that even though it's a little bit lighter, it doesn't have some of the other problematic characteristics, heavy metals, sodium, that a lot of the paraffins, the things that when you heat it up, it creates acid. So there's a lot of benefits to taking this crude and running it into your processing, which is why it's always had a healthy home going west and east when you're thinking about some of those locales. But when we're looking at some of the processing, like you said, with some of the issues with refining, now kind of pivoting back towards that natural gas liquid side, I mean, what is the growth that you guys are projecting when you're looking at propane in general, as people are moving away from maybe diesel, which is, that's essentially what heating oil is now. And as we look out, as people have moved away from the urban setting, you've seen some of these areas have their increase in populations. What is the expectation for some of this propane pricing? Where can you get to those multiples that is happening in the public companies, or is there something where there's going to be some demand to support it, or is it just it's stupid expensive? You're going to have to build something greenfield and then kind of capitalize something that might have some opportunity or some uplift in general.
Yeah, I don't think it's something that we could go build a business on day one. Mm-hmm. I do believe that there is, kind of in the whole Rockies, there's a whole propane issue, and we're very bullish propane prices. I think it's going to be more getting your foot in the door. Right. And then going in and adding a depropanizer and helping to serve those local markets. You hit the nail on the head, though. As people continue to get more remote, move away from heavy heating oil, et cetera, the propane market should be very strong. I think the only potential headwind here, and you've kind of seen it happening in New York, you've seen it happening in California, is this big push to electrify everything versus allowing new gas lines to come in. And
Right.
basically, I know that's bringing more methane, but we do feel like that's the biggest headwind on any NGL right now, is that your larger markets that are traditionally a little bit more blue run, your Chicago's, your New York's, Cleveland, et cetera, Detroit, are going to start electrifying their cities, and at that point, you kind of that can scare you a little bit away from the NGLs and from just gas in general.
Yeah. So as you electrify, so we were talking offline. You were saying that at the beginning of your career, you were doing a lot on the wind side, and as you start to look at some of these optionalities for some of the greener solutions. But when I was in the Middle East doing a lot of this, we also had to have short cycle gas turbines to be that base load. In case things turned off, then you kicked over to the short cycle, and that provided some of that backdrop. So as we see additional coal plants going down, some nukes coming under question, there has to be that replacement factor. So as you see this replacement, is there going to be an opportunity for natural gas and some of that replacement value that would maybe support some of the activity that's coming out of the Bakken and some other locations to really consume more within the locale that you're talking about?
Yeah, I definitely think so. I think that if you look right now across the United States, we're around 20% of our generations is coal, and everything I've been reading and seeing is that there's estimates that we're going to have most of the coal-fired generation shut down by like 2035, and that's we're at around 100 gigawatts of coal generation, so that's quite a bit of gas-fired generation that's going to need to make up for that. You're obviously going to have renewables that are replacing some of that, but the renewables aren't a baseload power, and until energy storage really becomes more of a an economic option, we're going to have to back all these renewables up with gas. So we definitely feel like there's opportunity to get that gas to markets that is still heavily reliant on coal. And a lot of the Mountain West is falls under that bucket. So we do feel like as you look towards kind of Montana, Wyoming, Idaho, Colorado, Utah, you've got a lot of coal generation there that's going to be replaced by gas. So having the outlet to get down into kind of your, Cheyenne area, the hub down there for Rex is going to be able to serve some of that. We feel like, we are bullish the natural gas long-term game. While we're not chasing dry gas projects, we are definitely bullish on natural gas.
Mm-hmm. So when you're looking at some of those endpoints, because I'm a beaten gas bull in terms of where the future is, and it's interesting because there was some commentary just out recently that the Biden administration is going to be friendly towards, or going to continue the friendliness towards LNG and some of that capacity, leaving our shore. Which again, we're at about 12 BCF a day. That's heading into the international markets. We saw what happens when you have a cold snap in Japan, China in general, Asia across the board. And now when we start looking at some of these shifts and some of these population movements, specifically in the U.S., there's going to need to be some of this build out. Now, given the distance in which some of these people are living, natural gas pipelines to the home is kind of difficult. So when you're looking at maybe using, like, as you said, propane, storage has become a problem. Like in the Northeast, it's really hard to build propane storage. And that's really what we need to see to create additional hubs. I mean, what is your view in terms of getting some of this propane storage, or maybe from your company's perspective, maybe building some of this storage in some of these other locations, not Mont Belvieu or Conway, but something that is meaningful in terms of being that base to these other end markets?
Yeah, I think that's definitely a big option here, and most of that transportation is going to have to come by rail and then distributed on truck from there. And so you'll definitely need additional storage that comes online. And just, you talk about, them being remote or far away from markets. The other thing that you've got to kind of be cognizant of is the pipeline right of way is a huge issue and a huge headwind for the midstream industry in general. We're talking about, 60-day ban on drilling on federal lands or fracking on federal lands. But you think if you're laying a new pipeline, you've got national grasslands you have to cross, you've got national forests that you need to cross, you've got just all sorts of federally owned lands that if I'm trying to go get some right of way from Farmer Joe and Farmer Mary, I can probably get that negotiated in a couple of months and have a pipeline installed in 6 to 8 months from the time that I'm like, this is where we need to go. But
right.
If you're crossing federal lands, your application process is already, in the 9 to 12 month time frame. And if they make that even more difficult, then you really are going to have to start relying on rail even more. And so understanding where those future markets are going to be, understanding where, there's going to be demand for propane, and then setting up storage and distribution is a huge opportunity for the business. Right now, it's hard to pull the trigger on too much because we don't know what the regulations are going to look like. But there's no doubt that the population growth in the Mountain West has continued to grow. A lot of that's coming from California, them fleeing to the east. So,
yeah, as that will continue. It's funny. We did a whole thing on U-Haul puts it out, and then CNN had their own looking at the biggest growth and the biggest declining, and not surprisingly, New York and California have seen the biggest declines, and you're seeing that movement of outside those areas. But when we're starting to look at, you bring up a great point about right-of-ways and what that looks like and the difficulties that it's really come down to, and we've seen back and forth of the onerous nature of proving, let's just say how green it is, because they'll treat that cradle to grave, but a lithium ion battery is not treated cradle to grave. So it's a matter of, look at this hand, not on the other hand. And when we start getting serious about what is actually going to be required to really maintain some of our standards of living and just, the health of the the way we live our lives. Let's be fair. People freeze to death in extreme cold, not when it's 50 degrees out. Everything's fine at 65 and sunny, but when it's 110 and everyone's cooking their ACs, you're going to have a huge draw on the system, and you're going to need some of that peak load or peak shaving coming off of that base, and that's where the problem starts to mount. So when you're looking at some of these opportunities and what your company's trying to really accomplish in general, I mean, where are you trying to put a stake in the ground? Where do you think that right now you can get some of those right-of-ways, you can get some of that opportunity, and what does that growth profile look like? Is it going to take a different administration or a bit more understanding on what the new FERC regulations may be going forward?
Yeah, definitely a better understanding of the regulations. But I think, we were talking about just differentials earlier. I think that what's going to wind up needing to happen is it's going to ultimately, this new production is going to shift more towards the private market. The return thresholds for a project for a private equity backed, exploration and production company are going to be much different than a publicly traded company, just because of how much it costs to run those businesses. So I think what you're going to wind up seeing is additional assets. It will just kind of stay with the Bakken for a little bit. Some of those publicly traded companies, I would not be surprised if some of their assets are coming to market, especially some of the proven undeveloped stuff, and that private companies come in and develop that for a lower cost with better technology, and force it to grow in that regard. I think that when we sit here and look at where the opportunities are, we are really focused on basically everything: Colorado, Wyoming, North Dakota, Montana. That seems to be where we feel like we've got some expertise, where there is opportunity around future growth and new projects. And the big question mark on the Colorado and Wyoming piece is again back to the federal lands. And if there is a permanent ban on new permits, the Powder River Basin is in trouble. And right. You've got the everything out in Pinedale on the western side of the state in Wyoming is in trouble. So we just keep looking back to the Bakken. We feel like right now there's definitely an inventory issue at the current strip. Three Forks isn't really viable a lot of places. It's mostly Bakken. But if the macro trends continue to go in this direction, we're going to have a supply crunch. And if demand comes back, then we're going to see a spike in prices. It's going to open up a lot more, inventory and acreage. And it's hard to, you can't, hope is not a plan, but it's definitely trying to be in a position that we can catch some of this opportunity going forward with some projects that make sense today.
Okay, so when we look at just shifting south and looking at Texas and some of these other areas, we've brought online some additional export capacity for LPG. So we're going to continue to see that flow out, but if that market maybe doesn't come around, how easy is it to get from, let's call it the Permian, the Scoop Stack north? Is there something where you could have risk if maybe the international market isn't as strong and all of a sudden you have this capacity getting stuck on the coast? What is the pressure, or what is the downside potential risk of these assets going into your market? Or is it something that's like, look, the pipes only go one direction, there's really not a lot of backhaul, so it's not a huge problem really, unless there's a long-term change in the international market?
Yeah, if there's a long-term change in the international market, then I think that's definitely becomes a risk. And, you either bifurcate a pipeline to be able to send volumes in one direction or the other, or you switch the direction of a pipeline. I don't see that happening as much. I think what you're more at risk of is if you look at Waha's pricing, they've gotten down into the zero number. And if you just kind of take it and look at what happened up in Canada with the AECO market, AECO in 2018-19 was negative quite a bit. And so, I wouldn't be surprised if we end up having that in the United States, some of this negative pricing for gas. And when that happens, it opens up a whole other opportunity set. And you asked me a little bit about renewables earlier, and I think this is really where the renewables piece comes into play and starts to get interesting for me. Where do we? Green hydrogen is kind of like the big thing that keeps on being brought up right now. But green hydrogen is extremely energy intensive to produce, and then also it's challenging to transport. But if you start getting into a point of time where gas for long periods of time is at zero to negative prices, then it's probably the right thing to do to go ahead and make electricity out of that, make electricity for your osmosis process to generate hydrogen. As you look in West Texas, there's lots of underground storage. You could start to store hydrogen underground, and then start to bring it to market. And so hydrogen's interesting for me because, transporting hydrogen, you cannot transport pure hydrogen without stainless steel pipes, and that's not going to happen. What you need is you need to be able to blend it. And if you get north of, call it 20-25% of your gas in a natural gas pipeline being hydrogen, you start to get embrittlement, and the pipes can start to crack and start to fail over time. So what I think is that you've got a lot of renewables out there in West Texas, wind and solar. You've got gas, and then when gas goes negative, switch that to being able to produce hydrogen. And then if you can, then you are trying to sequester the CO2 emissions off of the back of the gas plant. You may be using an amine system or something like that, sending, drilling a new injection well for the CO2, sequester the CO2, have another well for hydrogen, and then you're blending that hydrogen and moving it to market. And so, I think that there's going to be a lot of incentives out there for these types of projects to happen when you talk about Texas specifically. And then the other one is where's cryptocurrency going to go? And I think that cryptocurrency is interesting too, because if nations start digitizing their currency, and it's anything similar to the process of what Bitcoin mining is, it's going to require lots of servers, lots of power. It requires tons of energy to produce. And so does natural gas become the conduit for cryptocurrency to be produced at a large scale? And that doesn't happen when natural gas has value, but if natural gas value in certain basins where it's stranded is not worth anything, then it starts to make sense in my mind to do some unique projects like that. And you've got guys out there right now like Crusoe Energy Systems. They're taking, flared gas or wellhead gas that's being vented and putting in smaller gen sets, but you haven't really seen this, multi-megawatt, large scale power generation facilities going for digital currencies. And that could be something in, maybe 5 or 10 years out that's interesting as markets continue to be stranded.
Right. It's interesting when you we're just looking at Waha now, which is at, as of yesterday was 277. We've seen it go negative. Opal is at 281. Cheyenne is at 280. So there's definitely that movement, and it's obviously weather related, seasonal in terms of when some of this gas has these movements. But before we go deeper into the Bitcoin side and the crypto side, because we're working on something similar on hydropower and using some of that to generate some of this capacity. But when we're looking at Scoop Stack, Scoop Stack is very wet, not as much oil. There's a lot of opportunity in there, but it's also pretty well developed. There's a lot of build outs, and there's a lot of pipe that's available. Now, is there any opportunity for pipes that maybe aren't as utilized, underutilized, or maybe tough to maybe say greenfield, but is that a spot that might have some opportunity as the NGL market starts to open up, not just on a regional basis, but also going south into the international markets?
Yeah, I think so. I mean, that's definitely a unique one for us. I don't have as much experience working Scoop Stack, but you've seen a couple of different assets change hands recently. You've gotten some consolidation happening there. So just this week they announced that Tailwater Capital just bought the Tall Oak 2 and 3 systems from EFM NCAP Flat Rock Midstream. So they're starting to consolidate. That's a good thing to see happening as two private equity teams partner up. You've got a handful of other larger systems down there, which could be interesting. Navigator Midstream has a very large system down there. As you start to look at consolidating basins and shutting down certain gas plants that are either small or running inefficiently, then I think that the Scoop and the Stack starts to make a lot of sense. I think they finally kind of gotten on the production side to understand the spacing. They had too many wells per section early on, and that was really hurting the well results in the EURs. But you've got a couple of operators down there that are have really seemed to have figured it out. On the private side, you've got Camino that's really consolidated a huge position there, and they have direct access to the via pipe down to the Gulf Coast. And if you think about it, you've got Haynesville Bossier, which is the closest, and that gas is going to always basically be at a premium. Then you kind of take a step back and you look at Barnett, and on the residue, the dry gas piece, that's pretty close to the market. But then you've got, your next closest basin to Haynesville Bossier to markets is the Scoop and the Stack. And so with all those NGLs and those liquids, that should be a basin that trades at a premium. And we kind of touched on it a little bit earlier, but at today's strip, maybe there's not a ton of inventory and there's not a lot to go basically grow and get from the Scoop and the Stack. But, if prices do continue to rise, then it's definitely a basin that should start to get more attention again. Right.
Now, just shifting over a bit, because we've touched on the ability of doing it, but we haven't said it outright. And when we talk about maybe a regional grid or microgrid at the extreme with some of these locations, and then we start tying in crypto mining and some of the capacity that would really be required, but within a self-contained entity, what kind of structure do you think would be required or would be necessary? And what I mean by that is, we've seen Bitcoin start coming under attack in terms of banning it in certain locations because it's a means of getting from local currency to US dollar. You've seen some central banks start to talk about like you said, digitizing, but then not to be an alarmist, but on the extreme, if you have an EMP go off, some tactical nuke going off, all of a sudden you have a certain amount of issue in the redundancy of where can you access some of this capacity that lives in the cloud or on a server side. But just looking at the microgrid or the regional grid backstop as we get more people from the urban to suburban setting, and the need to maybe diversify the electrical grid in general, and maybe using some of these stranded resources to generate not only maybe something that's going to generate cash, but at the same time providing power. And then on a regional side, just for those that don't understand, a regional grid is still tied to the main grid, where a microgrid is completely self-contained away from the main connection. So there's a lot of opportunity in terms of high grading ourselves while not rebuilding something from scratch, but utilizing some pre-existing assets. So that's a lot to digest, and I apologize, but just trying to think of that when you're looking at what you're structuring, what these stranded assets look like, maybe roping in and tying in some cash generation through crypto, and or attracting maybe a new manufacturer to that location that would be a long-term buyer of the power gen in the region.
Yeah, definitely. And I think that you're going to start to see more and more of that happening. I think the first step's a little bit of a baby step. And that is, at all of these oil and gas facilities, start to have them all run on their own power island, and as its own microgrid. And so if you look at the smaller gas plants, the smaller gas plants that have gas powered compression, you kind of think that's you're somewhere in the 3 to 5 megawatts of power that's required that you need a line drop for. If you get to the larger size facilities, your 200 million cubic feet a day plants to, you got multiple trains of this. And then for state air regs, they might be running on electrical compression. Now you're in this like 30 to 50 megawatt range, depending on the size of it. And that power bill is huge. And the way most midstream contracts are structured, the power gets passed back to the E&P producers on a pro rata basis. Right. But what you can do is you say, all right, well, I'm paying local utility X 5.5 cents a kilowatt. I've already got all this gas right here on site. I've got all this land. How do I go and put, a couple of megawatts or a handful of megawatts of solar PV, and then, have a backup generator or a turbine that's being run on residue gas after the gas has gone through the tailgate of the plant and it's cleaned up, and you burn it right there on site. And so, over the course of 10 years, you can be your own power off-taker. And you're starting to see several microgrid companies that have started to understand this. And I think it's the next kind of low-hanging fruit. So two things. You can reduce your OpEx cost by potentially lowering your power bills, or increase netbacks to producers by having lower power costs. So you're not settling the producers out with that higher power cost included. And secondly, if you're able to create an additional, revenue generating source on the crypto side, that's you're also adding revenue and you're reducing costs, which would make your operations ultimately more profitable, both for you as a midstreamer and your producer, who essentially own that resource. I think it's the way that it's going to start to go. I think that the industry is squeezed as far as project returns already. So, I'm hopeful that really starts to take off. And I think it's a way to sell a lot of this as green, because, you can basically be your own, off taker on a 10-year power purchase agreement and get these costs down below what a utility can do. And that's before even thinking about, all right, we're going to build a power plant and convince, Kia to come in here and put in a new, car manufacturing facility. So, and I think as you get further north, the other interesting thing for me is, with cooler temperatures and everything, opportunity for data centers, for cloud hosting centers, that are already in cooler environments, starts to become more and more real versus, putting them out there in the desert where they're sucking up tons of electricity to keep them cold.
Right. I mean, that's my pitch to AMC of taking all these movie theaters and turning them into server farms. Because I think, who's going to the movies at this point? But the interesting thing, and we're getting towards the end of our time, but when we start looking at microgrids, the biggest pushback is always rate base. Because when you have a broader rate base, you are spreading the cost across a broader amount of people. So that's why it's always coming to having some industrial user that's going to help offset that, like you said, Kia, or if you become maybe your own little microgrid and you're offsetting it by sharing some of the costs with others, and then you have that spare power just to kind of push back into the grid, and all of a sudden you're optimizing without having these massive facilities being built, and you're let's just say that you're deregulating to a point, or at least helping to build some redundancy within the system. So there's a lot of opportunity and a lot of things to think about as we try to optimize going forward. But with the last minute or so, any final thoughts, comments that you want to leave us with?
Yeah, I think that right now we're in this crazy uncertain time with all the new rules and regs that are coming out. And, we've already had to kind of, like I said earlier, pivot our structure to try and really be acquisition first, to being more flexible on maybe it's building something small, greenfield, and then making acquisitions. And, I think we're going to see over the next probably month or so, definitely in Biden's first 100 days, what's going to come out of it. And, regardless of how bad it is for the industry as a whole, it's going to definitely create opportunities, and being able to understand what those opportunities are and position yourself to catch them is going to be a positive thing. And, I think, while there are going to be losers and people that lose a lot of value out of their companies, if you're in a basin that's continuing to operate and that supply goes away somewhere else, you're going to get more money for your product because the prices are going to come up, and that's going to allow you to do some creative things. So I am very hopeful and optimistic that the new rules, the new regs create an economic environment that allow us to go try some new and different things like we've been talking about today, from the crypto side to the green hydrogen, renewable gas side, to microgrids. And so I think that there's going to be a lot of things that come out, and at the end of Biden's term, if we get to a more friendly regulatory environment, then now we've got a way to run these plants more efficiently because we've been forced to. So right. I think that's what I'll end with, something optimistic.
Yeah, well, yeah, I mean, we could have you on for another hour just to talk about hydrogen and what does that mean to the pipe, because it creates that brittle, like you said, and because it absorbs it after, and then it creates that brittle, and then you're cracking. So are you making the hydrogen on the front of the pipe or at the end of the pipe? So you're moving the water and then you're creating it. So there's so many things to talk about. And as I always say, what are Americans good at? And then it's inventing things and arbitrage. So everything we were just talking about is inventing something and creating an arbitrage. So
that's right.
It's we're definitely in a position for it. So Robert, I really appreciate your time. It was a fantastic conversation. We'll have you on to touch on the hydrogen side and some of these other renewables that could be interesting going forward. So thanks again so much for being on. And you can find us on our YouTube channel. We'll have the links to Robert's other podcasts, as well as his company Backdrop, if you want to learn more. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.
Thank you, Mark.